What is up, everybody? How we doing? Good afternoon if you're ahead of us in time. If you're from the future, good morning. For those of you still, in the morning part of our day. How is Benzinga? Daryl Benzinga is doing fantastic. You can see I'm joined today by my partner in crime, Kramer. Today's show is brought to you by Comerica Industries. To learn more, go to ComericaIndustries.com. We will get Kramer's thoughts on the market here in a little bit. But I want to know how you guys are doing. We got a good show planned for today. We got a lot of guests. We're going to have the CEO of the Playboy Group on in about 12 minutes or so, around 11:45 Eastern time. So very excited for that. We're going to talk about Playboy's plans for the Metaverse, for NFTs. So Ben Kohn, in about 12 minutes from now, we will have Dave Mazza, the managing director and head of product at Direxion. We're going to talk leverage ETFs at 12:15. We'll have Tim Quast on the show at 12:30. We'll have some trivia today at 1 o'clock. You know what? It's a Friday. It's like December. It's sort of getting towards that end of the year where it gets quiet. So this is going to be a nice, relaxing, low-key show. We're just going to hang out. What's up, Greg? Is it Greg Way? Hope I'm saying that right. Shelly, where's Bree? Great question. Shelly's asking the right questions. Aaron Bree is here somewhere. I don't actually know where he is. He got co-opted today. If you guys were watching our channel yesterday, or maybe you don't know. Maybe you do know. I don't know. The Behringer Capital gang, the company that acquired Benzinga a month ago, is in town right now. And a bunch of people have been co-opted to go do things with them. I wasn't invited. That's why I'm here. Aaron Bree apparently got the invite over me. I guess they deemed me too important. I guess I'm just too important to leave. I literally can't leave. If I leave, everything shit hits the fan. So Aaron Bree is out with some other people at Benzinga, and the Behringer guys doing God only knows what they're doing. Aaron Thomas, do you know what they're doing? I thought you were there before. All right, Aaron Thomas also does not know what they're doing. So, all right, I don't know where Aaron Bree is. He's somewhere in the neighborhood. He said he will try to be back before 1 o'clock. I don't know, Shelly. I have no idea where he is. So my thinking was like the reason they asked Aaron Bree to come is because they needed someone to like set their table and clean up after them and like pass out stuff and be like an intern, which is basically what he is sometimes. So I think that's what he's doing, but I don't know. We'll have to find out when he gets here what exactly he's doing. I clearly am too mission critical. Rohan, too mission critical. We cannot leave. Kramer, obviously critical for the daily functions of Benzinga. So that is where things stand. And there's a close-up of Kramer. Fun fact, I have my college friends, my group of college friends, they refer to me as George because apparently I remind them a lot of Costanza. So we do have a Costanza cutout, by the way.
Costanza vibes for sure.
Costanza vibes. I've been told that. I own it.
Can't stand you.
I own it, frankly. Don't care. We need to bring the cutouts back more. So we had Adam C on there on the other week. We had Rocky Balboa on the other week. Now we have got Kramer. We'll start cycling through the cutouts again. Let me just catch up on the chat. How we doing? Nice quantum, Kyle. Okay, Kyle. Thank you for that comment. Fearod King says if I left, he would stop watching. Damn. All right.
I didn't realize I was there. How you are, you just have to say that you're fine when you're not really fine.
I don't know what's going on. I'm hearing shit in my ears. I don't know if you guys heard that. Maybe you didn't.
You're fired.
All right, that one I heard. Anyway, okay, so here's what we'll do. Let's start off with just overall look at the market. We got a lot of things happening. For a Friday, it's a really busy day in terms of just shit going on, right? So let's bring up my Benzinga Pro. Let's start with, first, the watch list that we made on Tuesday. The Benzinga Live watch list we made for this week. We put 4 stocks on it. We put Roblox, Palantir, let me zoom in. Roblox, Palantir, Alibaba, and Stranico. Mixed results today, as you can see. Palantir, at some point Palantir will stop going down. You would think so, wouldn't you? Let's get Palantir up on the screen. You would think it would stop going down. I don't know. I'm sorry, guys. I don't know what to say about this one. Just frankly, throw it into the group of the rest of the major IPOs / SPAC / direct listings from the last couple of years. A lot of them are down a lot. So, Bruno, yes, I can ask Ben that question when he's on in like 5 minutes. I can ask Ben your question. I have some of my own questions, but we will definitely get some questions from the chat on with Ben Kohn. Okay, Palantir. So wait, let's go back to my watch list here. And let's go back to the overall market and just look at that for a second. Because, like I said, for a Friday, we got a lot going on. We, of course, have the CPI number, which is kind of the most watched number right now. We don't really care about jobless claims anymore. We don't really care about as much about the jobs number. But inflation, everyone knows that. Everyone feels that every day. So we care about inflation, and inflation is high. We knew that already, right? The numbers came in pretty much where we thought they would. Not when I say we, I mean like the overall market economists. So where does that leave us, right? It leaves us with tech in the green, but kind of the same tech that's been leading us, right? You got Apple up, Amazon's down today, so that's notable. But you got Apple up, Microsoft up, Google is barely in the red. Yeah, just a smidge in the red there. And your ARKK, your proxy for like the super high growth stuff, down 1.25%. As far as sectors, we've got what's in the red, what's in the green here. Staples in the green, the XLP leading us. You got tech, like we said, that's mostly just Apple and Microsoft at this point, leading us higher today. I don't know. It's kind of a mixed day. Kind of a mixed bag. If we pull up a chart, we can take a look. Let's start with the SPY. Just do this. So yeah, we popped off the number. That's that green candle, and now we're well off that. We've been basically going down for the past couple hours. Qs kind of looks the same, right? Same pop, same drop. I always care about the IWM. Got to give love to small caps. Historically, the small caps do outperform large caps over the long term. Not this year, obviously. Man. I've got some IWM equivalent exposure. Tough year, IWM. I want to know what stocks y'all are watching, right? I'm watching a lot. I'm watching Costco. I'm watching Playboy because we're going to have been on the show in like 4 minutes. I'm watching AMC. I want to talk about AMC today. Vodarock says cryptos are crashing. We'll talk crypto for sure. We'll talk crypto for sure. Pork Chop's watching LAC. I haven't looked at that one for a hot second. Drop your tickers in the chat. I'm just curious. This is going to be a very low-key, very mellow kind of show. In fact, Rohan, after we get Ben, after we're done with Ben's segment, I would like to see if we can maybe get some tunes on here. All right, we got some names. We got DocuSign. How's DocuSign doing? Twitter, Disney. Disney's in my forever portfolio. Docu got a bounce, right? DocuSign it had to have. Yeah, slight bounce. Look, that bounce is being faded. All right, if you bought DocuSign or any growth stock this week and you didn't sell your profits, you should probably do that. Right? Had this huge 40% drop in one day, had a bounce, coming off that the high of that bounce. If you bought DocuSign this week, basically in the last 7 days, you're probably up, or at least flat. I would absolutely think about selling here if it were me. I am not, but that's just what I would do. Keep an eye on my scanner tool. This is how I find movers throughout the day, guys. This is how I find out what is moving, is my scanner tool in Benzinga Pro. I always have this on the screen. Always, 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 always. RM is watching NVIDIA. Dare. Ooh, Nucor. I like Nucor. Cleveland Cliffs. Seeing some familiar names here. CrowdStrike. Okay. Austin says, sell anything that's not defensive. Austin, in your opinion, would mega cap tech be defensive? Just out of curiosity. I don't know if there's a right or wrong answer to that. Would Apple, Facebook, Amazon, Microsoft, Google, Tesla, would that be defensive to you? I think it kind of depends on who you ask, right? Zillow. Oh, Zillow. Poor Zillow. Poor Zillow. Dutch Brothers. Mike is watching Dutch Brothers. Okay. I see you. You know what, guys? Let's just do this. I see Ben Kohn. I see him here right now. He's backstage. Since he's here, let's just bring him on the show. What do you guys say about that? Can we get some likes? Can we get some likes for Ben Kohn? Can we get a 1 in the chat if we want to see Ben Kohn right now? I think I'm going to do it because, I'm understanding of his time. CEO of a company. He's got a lot going on. Can't spend all day waiting for me to bring him on the show. So let's just do this right now. Let's just bring Ben Kohn to see. Hey, drum roll! Ben Kohn, welcome back to Benzinga Live. How are we doing today?
I'm doing great. Thanks for having me again.
Okay, let's start with this. There's been a lot of announcements in the last couple of weeks out of Playboy.
The team's been working slightly hard.
Yes. Let's start with this. Explain to us, what is Playboy's overall metaverse strategy here? Yeah.
Look, there's not too much I can share right now. What I can say is we have a very robust pipeline and strategy moving forward. But we are transforming this company to be a Web 3.0 company moving forward. Web 3.0 really helps us, given the censorship that we have faced for pretty much the last 70 years from what I would say is mainstream. So when you think about, our friend Mark Zuckerberg deciding what is and what isn't appropriate, Web 3.0 gives us a way around that. But, it's going to be about membership moving forward for us. We're really excited by the potential for a Playboy Mansion in the Metaverse. And we've built and we'll be launching very shortly our Centerfold platform, which is really our creator-led platform. For the first time, we have a way to work with talent after they've actually posed for the magazine historically. And this is an ongoing relationship. And that talent will be, able to interact with their fans in a profitable way for both them and us. But more importantly, that talent will also be part of the Playboy Club or the Playboy Mansion in the Metaverse as we move forward. And so we're going to use blockchain, NFTs, and everything else as part of our global strategy.
So you mentioned Centerfold. That's basically your how would you call it? Your content creation platform, your platform, your Web3 platform, right?
Well, it's not our Web3 platform. It's our creator-led platform, right?
Okay.
It's our way to stay engaged with the creators. So, Cardi B, Lana Rhodes, Elsa Jean, and the others that we've already announced, and we have a whole host of others coming. It's our way to have ongoing engagement with them in a profitable way. We've built infrastructure with our NFTs and with our e-commerce that I think is truly unique and a competitive advantage moving forward for talent. But that talent will have ongoing relationships with the company. And so just like last week at Art Basel in Miami, Cardi B is not only the creative director, the founding creative director of Centerfold, but she also came to our party in Miami. And as we've publicly announced, we'll have other ongoing product collaborations with Cardi moving forward, geared around consumer products and sexual wellness.
So what exactly is the end game of Centerfold? Just basically a a new platform, seeing that can't exactly rely on magazines or anything like that. Just the platform of the future, the way that you're going to be able to monetize and allow others to monetize content.
Yeah, it's exactly that. I think it's sort of the 21st century version of the magazine at the end of the day, and it's a way for us to have ongoing relationships with talent. And then on top of that, we plan on reintroducing what I would say is membership, the Playboy Club, the Playboy Mansion in the Metaverse, however you want to describe it. But that opportunity, that stage at the Playboy Club or the Playboy Mansion will also give talent a discovery tool, as well as a megaphone. And so think about having a pool party in the metaverse, as a discovery tool for talent on Centerfold.
Do you have apps or any details you can share about that?
I apologize. The connection went out for a second. Can you just repeat the question?
Yeah. Do you have any details as far as timeline, as far as when it will be launched or next steps?
For Centerfold?
Yeah.
So I'll go back to what we said previously, which is it's going to launch in December, and it's right around the corner. So we're very
Okay.
excited by it. Team's done an unbelievable job on the UI UX. It looks great, and just excited to get it out there.
All right.
The AWS outage the other day delayed us a day or two, but nothing big. So.
All right, I've got a lot of questions on my own, but the chat's flying, so I want to give the chat some time here. So here's a good question from Jackie. Can you explain what exactly, like, aside from subscriptions, what are all the revenue sources or potential revenue sources that can be generated from Centerfold?
So obviously there's subscription revenue. There can be cameo features on Centerfold. So personalized messages, direct messaging, live video, e-commerce, NFTs. So we will have the ability for creators to actually mint their content. Won't be day one, but it's in development to actually mint their content as NFTs and put it on the blockchain. And then more importantly than that, there's going to be opportunities for that talent to participate in this global iconic brand, that drives over $3 billion of consumer product sales today. And that will come to life both in real life experiences, like we just did in Miami with Art Basel. We had 2 of them. And that will also come to life in the metaverse through the Playboy Mansion or the Playboy Club in the metaverse in the future.
So it seems like a lot of the investing public, as it pertains to Playboy, is just honed in on Centerfold right now. If we can look beyond that for a second, after that launches, that's obviously a big deal. What next?
Yeah, so look, we got to stay really focused as a team, right? We've done an unbelievable job this year in the face of COVID. We commented on this in our third quarter. Revenue grew 67%. We still lost a minimum of $5 million because of COVID. So e-commerce business and that transition to D2C is well on its way. And I think you see with the product offerings that we've established on e-com, great. Centerfold we have to make successful. We're very committed to not only what we're going to launch with, but the technical roadmap we have moving forward for future product offerings. And then over time, it's really the Playboy membership. So that sits above everything else. That becomes long-term our hero product, and that is the ability for our consumer base to step inside the world of Playboy. And obviously, with Centerfold, that gives us a huge marketing platform. And so the way I think about Centerfold, not only is a great business opportunity, but it's that top of the funnel, very much like what the magazine used to be back in its heyday. It's that top of the funnel to the rest of Playboy.
Can you speak a little bit about developing this platform, this tech-enabled platform? Like, what are the challenges of that? Like, it's basically you're talking about, finding new types of talent, and I don't mean talent in terms of like Playboy talent. I mean like tech talent, right? You're essentially building out a whole new product in an emerging industry that's unfolding sort of as we speak right now. So, what are the challenges of finding? That would seem to me to be the biggest challenge for you, is like finding people who can actually like understand and build this stuff.
Yeah, look, I think we've done a great job attracting talent so far, and we have a lot more in the pipeline. We did buy Dream, and one of the reasons we bought the Dream platform was for sort of the plumbing behind Centerfold, but also because Dream was also part of Jupiter, which was a network of developers. And so, we have 50 plus developers now working on this, and the talent that we acquired with Dream. But look, there's a lot more coming in the future. If you look at the talent that we've attracted as a company, one of the reasons I wanted to go public was to be able to attract a different level of talent. And I think we've done that. So you look at Lance Barden, who is my CFO, 13 years at the Match Group, led every acquisition they did. Before that at IAC, you look at the team he's built underneath him. Our head of FP&A was the former CFO of Nike Direct. We brought in our chief accounting officer, had taken Snapchat public. We have Kevin Diamond, and we have more coming in the near term.
Okay. Question from our chat here. Question from Austin. He wants me to ask you about your licensing partnerships and how those are progressing. And he's referring specifically to your CBD products.
Yeah, so licensing overall is progressing. I think we talked about this in the third quarter. I don't remember exactly the percentage growth but it was about 14%. And obviously it got hit by COVID as well, because gaming for us is a licensing partnership, and we've lost a bunch of revenue this year around that. The pipeline is robust, as we've said in our guidance towards that $600 million. It's a growth rate that's in single digits. Obviously, we're growing much faster than that. And the only thing I would say is obviously COVID has slowed down some of our plans. Obviously, we can't travel, and part of what we need to do from a licensing perspective to change some of the existing deals or to evolve those deals has to do with actually visiting partners directly. When that can happen in person, I don't really know. Specifically, I went to China 10 times in 2019 and haven't been back since.
Yeah.
I think my wife's happy about that, but at the end of the day, we need to get over there, and it's just not something you can do on Zoom with the language barriers. And so, obviously India, we really believe in India long term. We think India for us can be as large as China potentially. But again, given what happened to the society in India with COVID, things do get pushed out, and you have to do things that are sensitive and not just, push forward. You have to adapt based on the existing climate.
Yep. So there's a bunch of questions in the chat around the same idea, which is on the Centerfold platform. Who will be on there? Will it be just Playboy talent, or is it open to everyone?
So in the beginning, obviously it's going to be a controlled environment as we get it up and running, and want to make sure from a technical perspective, everything is working, but we do plan on opening it wide over time. Obviously, I think that's in the best interest of the company from a total addressable audience, and it's in the best interest of our shareholders over time. But we do have very strict content guidelines that we are going to adhere to. And those are content guidelines that have been developed in coordination with our talent to really create a safe place for them to be, and also work for the brand overall.
It would seem to me that a lot, you talked about the top of the funnel. It would seem to me that events, real world events, would be the real top of your funnel, right? Because that's what allows you to drum up excitement. You mentioned people like Cardi B can make appearances. Is that accurate?
No, I think, look, here's the problem with real world events, right? And I think we saw this with Travis Scott last year on Fortnite. Okay, he hit 27 million people, I think, were tuned into his concert on Fortnite. Yeah. That's a hell of a lot of tour stops to make, right? I don't know any other tour that's ever hit 27 million people before, right? Unless you want to tour for 5 years. And so when I think about that overall, I think what we have access to with Centerfold is this huge fan base. Remember, we're in effect the cable company at the end of the day with Centerfold, right? The talent are individual channels within that cable offering. But our ability to then market other products and services to that offering is unbelievable. I believe that Playboy is one of those unique brands, really one of the only unique brands that actually can couple those digital experiences with physical experiences. I mean, our Miami party for Friday night at Art Basel was crazy. I mean, it was literally hundreds and hundreds of people lined up to try to get into it. Around the corner. And so it's that heat that Playboy brings all the time in its events that make it so successful. And so I think, what Web 3.0 does and what the metaverse allows us to do long term is to actually intersect the two, right? So we can do a party in the metaverse, coupled with in real life experiences, and actually have the two interact with each other.
How far out are you expecting to see real serious revenue and even earnings from all this?
Well, look, I think that I would expect in 2022 that Centerfold will be a successful product for us, and will start to generate, significant revenue. You have to look at it relatively speaking that you're starting from a base to zero. But I believe, based on the founding talent that we have, plus the interest from other creators, that Centerfold should be a successful product for us in 2022. We did generate $8.5 million of upfront NFT revenue with our Rabbitars. There's been over 2,000 ETH of secondary sales that have traded since then. We get 10% of that on a gross basis. And so, as we move into 2022, we have other plans for NFTs moving forward. So when you look at that, coupled with Centerfold, long term, I believe that will be the dominant portion of the business. The guidance we've given to date of 600 million, which was an increase from 300 million when we went public, is only our consumer product business. It's only what was in-house when we gave that guidance 2 quarters ago or a quarter ago. And the Centerfold revenue, the membership revenue, the NFT revenue, as we said, was not part of that guidance moving forward. And what we did say in Q3 was we believe Centerfold alone, not including the Playboy Club membership or other things, could surpass that of the consumer product guidance we've given.
This is a question that I guess I tried to ask it, but Mitchell in the chat is asking it better than me. Can you speak more to the technical challenges of launching this platform and all of this?
Sure. With any new technology, there's challenges. What we did buy was a product that was up and running on Dream. We've made some changes to it. We've changed the UI UX completely, and we have a team that can execute on that, and that's what they've been doing. And we have a strong product roadmap coming forward over the next quarter to 2 quarters of new features that will be added to that. So we're thinking through the cameo features and other things like that we think our talent can deliver in a very unique way.
I'm just making sure I didn't miss any comments in the chat. Barry's asking why that guidance wasn't included in your last report. I'm assuming that's what he's referring to.
I'm sorry, what's that?
Barry's asking why that guidance was not included in your last. I assume he's referring to your last report.
So our last report we gave, we reiterated our $600 million of guidance. Again, we went public in February, right? We talked about 2025 revenue of being 300 million. We've now increased that to 600 million. That is at what I would say is conservative growth rates compared to where we're growing today. But specifically on guidance to Centerfold, it wouldn't be prudent to give guidance yet when you hadn't even launched the product moving forward. And I think for us, we want to under promise and over deliver as a team. And so, we'll update guidance as we have data to support that guidance moving forward. Okay. But otherwise, you're giving something that you haven't actually launched to see the conversion. And I don't want to be in a situation where I over promise something to the shareholders and then under deliver. All
right. Last one with this. A lot of people wondering about the utility of the NFTs out there buying. Squad Father's asking, will your NFTs function as tickets to in real life events?
So I think we've already proven that. So we've had 2 events since we've launched the NFTs. One was an NYC NFT party in New York City. And then the second was in Miami at Art Basel Saturday night. And we plan on doing more live events in the future, but we're also going to be, coupling that with virtual events. And so we have a holiday party coming up for our Rabbitar community in the Metaverse.
Damn. Holiday party in the Metaverse.
We'll make sure, Spencer, you need to buy a Rabbitar and come to it.
All right, I do. All right. Ben Kohn, the CEO of the Playboy Group, ticker you guys know it, PLBY, joining us here on Benzinga Live today. Ben, a pleasure to chat as always. Have a great weekend. Have a great holidays. And we'll be watching. You said end of the year. We're watching.
Same to you. Have a great holiday and a happy new year. And thanks for having me.
All right. Guys, he said December. December has got 20 days left. All right. That's what he said. Smash the like, guys, for that interview. Loving the participation in the chat. Okay, I need to catch up here because yes, Michael appears to be correct. Whatever show we had planned today is just gone. Okay, this is a mongoose show now. Is that what this is? So all right, help me out here because I'm playing catch up. So yesterday there was a congressman who referenced mongoose coin, which is a joke, and now there is a real mongoose coin. Is that correct? I want to make sure I'm getting this right. I just saw something here. This is probably not the best source, but well, maybe it will be. I don't know. Just saw this article from Bloomberg. Gonna put it up there. Come on now. Okay. So we have a joke that became a real thing. Sound familiar? This is what crypto does. This is a feature. This is not a bug. This is a feature. So the congressman seems to think that this is a bug. So what's his name? Brad Sherman. Of course, he's from California. Brad Sherman from California. Seemed to think that this is a problem. This ain't a problem. This is how it works. This is it. Can someone help? Is the ticker MONG? And where do you buy it? Can I buy this on MetaMask? Sushi Swap? I'm asking for general awareness. I don't actually know where it's not a Uniswap, Brandon says, because it's not a listed coin anywhere, right? So all right. Uniswap is what they're saying. If you're on Uniswap and you want to buy some mongoose coin, it's going to the moon apparently. Cool. Does anyone? Yeah, that's a good point from Tiny Pipe. Does anyone know any mongoose coins experts or specialists that we can get on this show? No, obviously not. This world is endlessly fascinating. The ticker isn't Mong, it's Mongoose. Thank you, Braden. I'm not on Uniswap, so I don't know. Wait, K Evo, is that true or not? He's saying the guy just tweeted about it. Let's find that tweet right now. Let's go. Stop screen. Let's bring up my whole name. Let's just do this. Can I can't do it. Frick, because I have one fucking monitor up here. Pardon my French. I have to get more screens up here. Okay, so yeah, he did tweet about it. What the shit? What is this? What is this? Holy crap. Dude, I love it. He's leaning into the meme. I love it. I love when people start up a meme and then lean into it. It's no fun when you reject the meme. You can't reject the meme. You got to lean into the meme. That's the only way. It is the only way. You got to lean in. It's like what Sheryl Sandberg says, right? Lean in. I love it. Oh my gosh. What a freaking time to be alive. What a time to be alive. Did he tweet anything else? I don't care. No. Boring. Congress, we don't care. Boring. Nope, don't care. Okay. That was fun. Jesus. I don't even know, guys. What a time to be alive. This is the crazy thing, right? People are getting legitimately rich off this. Like legitimately rich. It's wild. Put a 1 in the chat if you own Mongoose right now. I need to know. And don't lie. I'll know if you're lying. Put a 1 if you own Mongoose. I'm sorry to those of you that thought this was a stock show. This is no longer a stock show. And also, can someone tell me the price? All right, that's more people than I thought already. Wait, what is the price of this thing? Daryl, I'm with you, man. You know what? You know what I should do? Is I should call the host of Mood or Bust. I should call the Mood or Bust guys. Actually, no, I'm not going to call them because they're going to be on stream in 2 hours. 2 o'clock, Mood or Bust. They're going to be talking about this, I'm sure. So I would say stay tuned for 2 o'clock Eastern time. Logan, Ryan, these guys know way more about this shit than I do. They will be on stream to talk about Mongoose Coin and anything about that. 15 zeros. 15 zeros? Oh my God. What's up, Jordan? How you doing? What's up, Rohan? What's up? I got people in the office staring at me. Why? What do you want? All right. She's looking at me. I don't know why. Okay. I apologize, guys, for my voice. I'm a little congested, as you can tell, but power through, right? Power through. Okay, so we're going to have Dave Mazza. We're going to talk leverage ETFs in like 5 minutes. No, Shelly, I'm not in trouble. If I was in trouble, I would not be as brazen about it, but I'm not in trouble. Let's do this. Let's pull up while we're on the topic of cryptocurrency. Let's pull up a heat map, shall we? Take a look at our actual cryptos that like actually matter. No offense to Mongoose. Damn. That turned. A couple hours ago, there was a solid mix of green and red. It was like a Christmas tree. Now it's just straight red everywhere. Bitcoin down. ETH down. ETH down almost 6%. Solana down 7%. That sucks for me. Who am I kidding? I look at this stuff because it's interesting, but I got to stop. I got to stop looking at this stuff. The more I look, the more I want to sell. I don't want to sell. I don't want to sell. How's Sheeb doing? Where's Sheeb on there? Only down 4%. You know what? I would have guessed Sheeb and Doge would be down more than that. I kind of feel like there's only so much appetite. There's only so much room for meme coins at any one time. You know what I mean? Like, there can only be 1 or 2 alpha memes. Because people just go from meme to meme. So I would have thought with Mongoose Coin taking over the world, that the other meme coins, Doge and Sheeb, would go down more. But I guess, you know, they're down, but relative to the rest of the crypto market, they're down in line. So I don't know. Yeah, I've never sold a crypto in my life. I've bought, I own Bitcoin, I own ETH, I own Solana. That's what I got. I'm open to owning more, but no memes, I think. I don't know. Maybe. Hey, as a reminder, if you want to free Bitcoin, it is so easy to get free Bitcoin. So easy. All you have to do is go to Voyager, the Voyager app, download the app on your mobile device, enter the code ZING, Z-I-N-G, when you sign up, deposit $100, and make your first trade. It's really not that hard. And then they'll give you half that amount, $50 in Bitcoin for free, just for signing up on the platform. Check it out, Voyager app. Do it. All right, let's get that off the screen there. Enough of that. Chat's wild. I don't know. Rohan, can we get some tunes up in here, man? Can we just get some music or something? It's a chill Friday. And I'm going to bring up my Benzinga Pro. I'm just going to hang out. You tell me what you guys want to talk about. I've been on stream for 3 and a half hours today. I'm all streamed out, and I still have like 3 hours to go. So, you tell me what you guys want to talk about. Besides Mongoose, please. I have a confession to make, all right? I don't even know how... I don't have a crypto wallet. So I don't know how to get on Uniswap or SushiSwap or MetaMask. I would love for like Logan or Ryan to come on. I think they're busy right now. To come on and like walk me through how to actually get a crypto wallet. Shelly, I don't want to talk about the Fed. Shelly wants me to talk about the Fed. Shelly, what do you want to talk about the Fed? They're either going to say they're going to do stuff or they're not going to do stuff. Hey, Rohan, can we get some tunage up in here? Thank you. Young Money says, make an account live right now. Okay. Young Money, where do I go to get a open up or get a MetaMask wallet? How do you even say it? You get a wallet? You open up a wallet? How do you even do that? Fear King. Yes, that's a good one, Fear King. Okay. Let's look at Nubank. What's the ticker there? Is it NUB? Is it out yet? Fear out? What's the ticker, Fear out? It might not be out yet, in which case I don't know. NU? Thank you. Oh, New Holdings. That's why they got me. Okay, so New Holdings. We have an IPO. This is from yesterday, right? Okay, sorry. All right. New Holdings. Warren Buffett has invested in this company. It's a neobank. If you don't know what a neobank is, it's basically a bank, but for millennials and Gen Z. That's more or less what they are. Equivalent to Chime, more or less. Equivalent in a lot of ways to SoFi. No fees. Actually, Fear out. Do you know, does Nubank do the pay whatever you want thing? Some banks do that, right? Some of these neobanks would do like, pay us whatever fees you want to pay us, whatever you feel is fair. I know Aspiration does that. So let's look at this. So the IPO was yesterday. IPO priced at $9. I'm looking at the release here. $9. So what's that? He says it's a $40 billion valuation. All right, 40 bill. We open at 11.25. So get opening pop. And hey, we're actually doing okay. So we're above the IPO price. Guys, IPOs suck. IPOs suck. IPOs this year are terrible. I'm sure there are a lot of good companies that IPO this year, but their performance is dog shit. I'm sorry. That are dropping truth. That I'm with you, man. Berkshire Hathaway's Apple in disguise. Apple with some other value, right? It's Apple with a side of Coke and some banks. That's all Berkshire is. Nice. Yeah, Young Money. Rivian was the exception to the rule, right? Rivian was the exception. It was the one non-shitty IPO. And now look at it. Yeah, Open Door sucks. And by the way, I'm not saying these businesses suck. I'm not saying the companies suck. The stocks suck, right? It's basically true for most new issues. If you're a new stock, and I don't care if it's IPO, I don't care if it's SPAC, I don't care if it's direct listing, the vast majority of them are down this year. Don't know. All right. I am waiting for... Dave to join us here. Dave Mazza from Direxion. When he joins, we'll bring him on. So here's my take on the IPO thing. All right. Actually, it's not just IPOs. This applies to any stock that's down a lot this year. Okay, so DraftKings, for example. In a few years, 2 or 3 years, we're going to look back at 2021 and say, holy crap, what a buying opportunity. You could have had DraftKings for 30. You could have had Zillow for 60. You could have had Peloton for 30, right? 38 today. You could have had Teladoc for 94. The problem is, of all these beaten down ones, most of them probably won't come back, right? Like 25% of them are going to come back. 20 to 30% is my guess are going to come back. The rest are going to stay down forever, right? So how do you know what 25% is? I don't know, right? I don't know. You don't know. We don't know. That's what makes the game so damn hard. I can't tell you like who the winners are going to be. Like, you guys know I'm long SoFi. It's been a piece of crap. But I have enough conviction not to sell right now. It's also such a small piece for me. You know, I've got some cannabis. Tough year for cannabis. Brutal year. I'll show you guys all the cannabis stocks that I've got. I'll bring them all up together. That's it. Those are the 4 that I've got. Look, year to date. Look at this stuff. Horrendous. But again, conviction, long-term thesis, small piece of the pie. Not worried about it. But it is tough. I mean, it's not fun to see a stock down 30% in 1 year. It ain't fun at all. So, I don't know. I'm open to ideas. Who do you think is what I want to know? Who do you think is going to be a long-term winner? I think SoFi. That's why I own it, right? I think these cannabis names. I could get talked into DraftKings here. I could get talked into Penn here, right? I could get talked into that stuff. You probably could not talk me into like Teladoc. I'm seeing STEM, Affirm. Oh, Lending Club is an interesting one. That's had a great year. Lending Club's had a great year. Tough month. Great year though. Voodoo says you better go best of breed in each sector. Okay, so let's talk about that. Best of breed. What does that mean? That means earnings growth, right? Consistent earnings growth. That means top line and bottom line, actually. Top line revenue, bottom line earnings. That means reasonable valuation, right? Not nosebleed valuation. Reasonable price to earnings, reasonable price to sales. Reasonable EBITDA. That means no like crazy shit. No crazy adjustments. No crazy like customer acquisition cost of like 1,000, right? No like crazy outlandish metrics. No things that are tied to a specific fad, right? Okay, the ideas are coming now. Okay. Wait, Super SPAC Man wants to know if DraftKings has turned a profit. Let's find out. No. Super SPAC Man. To answer your question, they have not. Brian says MP. MP! That's been a great one this year, hasn't it? It's been amazing. This is like it's incredible. MP started the year at what? At 27. AP's almost double this year. That's fantastic. Congratulations if you're an MP. I am not. Robin says GGPI. Yeah, I know that one too. Ugh, tough, man. Tough. Young Money, what is Apple's price in 2 years? Well, Apple's at all-time highs, isn't it? So, what is there to say about it? I really don't know. I mean, every bet against Apple has been a bad bet. So tough out there. All right, you know what? Let's do this. Let's bring on our next guest. I see him. He's in here. He's backstage. Dave Mazza, manager, director, head of product at Direxion. Dave's got some great thoughts on anything and everything in terms of trends, overall market. Rohan, can we turn the music down, please? And let's bring Dave Mazza on the show. Dave, how are you doing today?
Hey, how are you?
Good. It's a Friday. We got a relaxing vibe on. We got some music. We got. It's a December end of the year Friday. So, how you doing today?
Sorry, can you repeat the question?
How you doing today? Can you? I don't know
I'm
if
doing well, thanks.
Okay. Dave, we were just talking about like the hot stocks of last year and how punished they are this year, right? Direxion has the Moonshot ETF, the ticker MON, that was on fire last year, and not so much this year. What is your take on just the change in trend there?
I think what we're seeing is, a market that's, characterized by continued question marks about the economic direction. And in particular, the impact that we're going to now face of a further inflationary environment, and one where the Federal Reserve is going to have to pivot pretty sharply unless they're intending to be, behind the curve. And what this has done is really impacted the valuation and the multiples of really some of the areas of the market that have done quite well. So to me, what this has done is kind of really made an interesting setup for some of these disruptive companies. You're obviously showing the Moon ETF, which peaked earlier in the year, and has kind of struggled to find some footing. But most recently, it seems to have found some support, around that $28 level and such. So, obviously well below its 50-day and 200-day. But I do think, the setup from a fundamental perspective, once we get through the reality that we are going to be in a rising rate environment, is going to be a bit clearer going forward.
All right. Well, speaking of rising rate environment, next week, right? Obviously, big meeting, Federal Reserve, last one of the year. What are you expecting as far as not so much what they're going to say, but like what the market could react, or how the market could react to that?
I think what the market, what we've seen in the last couple of weeks is probably more indicative of what I think the next few months are going to be. Obviously, next week's a big one on Wednesday on the 15th with the FOMC announcement. But the volatility that we're seeing, particularly now again, with a real bifurcation in three areas. So I see it kind of your FANG stocks continue to kind of power forward. Look at Microsoft today, Apple, what have you. Over the last couple of weeks, was kind of hanging out at 150. Now it's, well above 175, finding some support there. Then you have kind of your really future growth stocks. And in some cases, you can put your Zooms or your Pitons in there, but actually there's a lot of other names in there, your cloud names, etc. Yeah. Then you have your kind of crypto type plays. So that kind of triumvirate is kind of what we've been seeing the last couple of weeks. And it's going to be volatile as investors sort of play between the three.
Outside of tech, what else has your eye right now?
I think an area that has been really out of favor in 2021 is biotech. It's an area that we've been looking at in our leverage products. We've seen.
Let's bring them up on the screen right now.
In Labu.
I'm going to bring up Labu right now.
Side. This is really for traders. People need to be able to position and monitor their portfolio pretty sharply. We can see the sharp underperformance there. That setup potentially looks a lot better on a going forward basis. And then also, we recently launched the messenger RNA ETF, MSGR. We actually launched that yesterday. That's a 1 beta ETF, doesn't have any leverage in there. It can be used as more of a long-term holding, and that's an area where really concentrated just on biotechs involved with mRNA. But that's one where I think, again, outside of your Modernas and BioNTech, there's a lot of opportunity happening in the biotech space. It's just been
Wait, Dave, what was the ticker on that again? Sorry?
MSGR.
Thank you. Let's pull that guy up.
Probably not going to get much of a chart because it launched just the other day. Yesterday, actually.
All right. And so we've got holdings like what? Moderna, like you said, and what else?
Yeah, I mean, we're excited about this opportunity. Frankly, I think it's been a missing link in the ETF space. If I see another ETF with Apple at its or Microsoft at its top holding, I'm gonna get sick to my stomach. This is a fund that's got small caps, micro caps in it. Obviously, Moderna and BioNTech are in here, but you're not going to find Pfizer. Pfizer's just a distributor, right? They're not developing the actual messenger RNA technology. Certainly, that could change. If that's the case, they could make its way in here. But these are names like Sarepta, Vertex, Gritstone Bio, that investors may not have exposure to, and we're offering them exposure to in a relatively concentrated way. There's only 24 names in this ETF.
Nice. All right. Yeah. You know what I love about Direxion? You guys are always launching new products that give like direct exposure to niche themes, frankly. I mean, like this theme, the messenger RNA ETF. If you had told me about that a year ago, I would have said, What? Is there a market for that? I guess there is.
Yeah, no, and look, we appreciate that's really what our focus is. We have two areas. We want to create products for traders, and that's our leverage business, whether it's 3x bull and bear, 2x bull and bear. So folks who are comfortable monitoring your portfolio, trading on a frequent basis, that's for them. But then, and even there, we're trying to create narrow exposure. A fund that's really blown up over the last couple of weeks is OOTO. That's our bull fund on travel and vacation stocks. The performance, has been a bit choppy of that particular product, but we're seeing people come in and try to trade that, try to kind of bottom tick the market, if you will. So we've seen some nice flows into that fund, relatively new, but again, it makes sense for this market, especially if we continue to have this push-pull, with the Omicron variant impacting economic reopening, economic activity, what have you. And then on the thematic side, whether it's the Moonshot ETF, work from home ETF, messenger RNA, giving that kind of, to your point, that narrow exposure, that precise exposure to areas that people may not have thought about before or been comfortable with. And we're trying to bring that to investors.
There was a question in the chat, and I don't know how much Dave can speak to any one specific stock. I don't know if you can at all, Dave, but Super SPAC Pain was asking about BioNTech, and that's in the mRNA ETF, I would imagine.
So what's the question about the mRNA ETF?
Well, BNTX, is that in there?
Yeah,
okay.
BioNTech.
Okay. You can't. Can you speak to any one company or stock, or not really?
So I'm for some reason I'm having a hard time hearing you.
It could be me. It could be me. I'm like super congested right now, so it could just be the way I sound. The question was on BNTX. Can you speak to that one stock at all, or not? Not really.
Yeah, I for some my connection is kind of getting. I can't hear that particular question.
Okay, all right. If chat, let me know if you can hear me. Put a 1 in the chat. I need to know if I'm being heard. If I'm not being heard, that's a problem. It could just be Dave, but it could also be on my end, and I need to know that. So Rohan, help me out here. Dave, can you hear me?
I can. Yeah, I can hear you.
Okay. I'm going to just skip all that. What I was going to say. Thank you, everyone in the chat. Okay. So OOTO, the travel and vacation bull fund. I'm trying to understand that ticker. I'm not sure I follow. What is OOTO? Like, what does that mean? Usually you guys have tickers that, like Cure.
That's for out of the office.
Oh, that makes sense.
Yeah, so it's kind of a play on. It's not as quite as simple as WFH works.
Okay,
but we thought
that makes sense.
Fun to take that travel and vacation side and play up the out of the office there.
All right, Dave Mazza, Managing Director at Direxion ETFs. Dave, it is always a pleasure to chat with you. Have a great weekend. Have a great holidays. We'll talk to you again in the new year.
Thank you. We'll talk soon.
All right. That was Dave. I apologize for the connection there. It seemed like he could not hear me for a lot of that interview. So he was a pro. He bore through it. But I know I sound like garbage, frankly. My nose is... I can barely breathe right now. So... But also, like, having spoken to Dave before, he's not really like a stock guy. He can't really speak to specific stocks. It's not really what he does. So, the market is your answer, Super SPAC man. Sorry. Okay. What are we doing here? It's 12:30. What time is it? I meant what's up next is what I meant to say. I don't even know, guys. My brain is like not working. Thank you, Rohan. I've got no one here. I've got no AB. I've got a stuffy nose. I've got an hour and a half. Is Tim Quast going to join? Who the hell knows? I have no idea.
I mean, you always have me.
Oh, do I have you, Rohan?
I'm here.
I'm never quite sure if I have you or not.
Okay, earlier I had an interview to do. But
Okay.
you have me now.
Okay. But you don't tell me if you're leaving, so how do I know if I have you? I can't see you.
I need like a little sign above my desk.
Yeah.
Yeah. We're open.
All right. Tim is going to be here, I hope, in a few minutes. And we will do trivia at some point in the next hour and a half, I promise. Solar up is a good idea. No, actually, that's a pretty good idea from Easy Mike. I haven't done that for a long time. So let's do this. I'm going to bring up the ETF table for the year. This is what we're going to do. And I have not looked at this in like a couple of weeks, okay? Full disclosure. So I don't know what I'm going to see really. Let's pull up the ETF table as I log into my account. 1 second. And let's just go through the gainers and losers in ETF land for the year. Okay. There we go. Boom. Rohan, can I get the music back on, please? See, I don't even know if he's here.
I was trying to get headphones.
Okay. Can you get some music back on?
Music, you got you.
Yeah, thank you. All right. So what we have here is a table from etfdb.com. We got to get some filters on, though. We can't look at every ETF in the world. There's too many. So let's just do this. Let's filter out all of the leverage ETFs. We only want non-leverage. Let's get that out. Let's get the leverage out of there. Let's get the inverse ones out of there as well. And you know what? Just for starters, let's just look at equity. We can move on to other stuff, but let's just do equity for now. All right? Returns. Year to date. What do we got here? The First Trust Natural Gas ETF, FCG. I did not realize that was your top gainer of the year. So the point here is not to find specific ETFs or stocks. It's to find themes, right? So we've got natural gas. We've got energy, uranium, energy, metals, energy, small cap energy, uranium, energy. You see a theme here, everyone? Your energy ETFs, and you know what? And this is so often a theme. The best performers become the worst performers, and the worst performers become the best performers. Because last year, all these energy names were your biggest losers of the year. They were. They did not come back last summer, last fall. They did not. So the laggards become the leaders. That's what's happened this year. These energy names are if you bought the dip in energy last year, congratulations. You're having a great year. Let's see if you can find anything else that's not energy. They're all energy. Oh, here's one. Invesco small cap value with momentum. What the heck is that? I never heard of this one before. XSVM. It's got VRTV. It's got United Natural Foods. It's got Macy's. Okay. I've never heard of this. Never heard of this fund. It's up 50% this year. Nice. Let's keep going. So we know we got energy. Okay, we know that. Let's move on. Look at that XRT. Look at that retail. We got lithium on here. Semis. We know semis have been good this year. Oh, that's interesting. China Energy. That's interesting. Some more semis. Whoa! Look at this one. Look at Let's look at IAI. The iShares Broker Dealers and Securities Exchanges ETF, aka your Schwab and your Virtue, and your big banks. Not Virtue. I meant NASDAQ and ICE. So there's ICE. They own the NYSE, New York Stock Exchange. There's NASDAQ. Morgan Stanley, Goldman Sachs. Oh, dude, this ETF is 40% two companies. Psh, pass. See, that's a red flag for me. Just want to say that now. It is a red flag for me when I'm looking at an ETF and I see you got a handful of stocks make up like 40% or more of the fund. Major red flag. Because to me, that defeats the purpose, right? The purpose is diversification or targeted exposure. If I wanted Morgan Stanley or Goldman Sachs, I would go out and buy Morgan Stanley and Goldman Sachs and not have to pay a fee, right? This ETF, I'm sure it has a small fee. They all do. Yeah, 0.41%. Why would I buy this? To get mostly two companies. Pass. I'm sure you can find the same group of companies in a more balanced ETF. I'm sure we could. Anyway, this is what I do in my spare time. I just go on ETFDB and I just look at ETFs. It's basically fun for me. Okay, you want to go to the laggards now? Let's go to the laggards. Let's do it. Okay. We got to go through all these ones that are I don't want to do this. It's not a great indicator because all these new ETFs out here this year. Hold on. Just gonna just gotta skip through all the new shit. There we go. Okay. So if we're only referring to ETFs that are more than a year old, this should not be a surprise to anybody. Chinese education names. Look at this. Education ETF down by half. Cranch KWeb, the ETF that I had for like 4 years. I love this thing. Down 44% this year. Best sell of the year. Maybe the best sell I've ever had, honestly. I saw that back in like June, July. Huh. PGJ, Golden Dragon China ETF. So we're seeing education, which is mostly just your Chinese education names. You're seeing China, emerging markets and e-commerce, aka mostly China. Okay, ARC Genomic, ARC G, ouch. Look, emerging markets, cannabis, yeah. Cannabis. Oh, here we go. The Renaissance IPO ETF down 26% year to date. Rohan, why are you filming me? What are you doing? He's filming me right now. Whatever. That's funny. Let's look at the top holdings. And this is the IPO ETF. It's got a lot of overseas exposure. See, this right here is actually an advantage of ETFs that I have not mentioned before. Is it would be very difficult to buy shares of SoftBank if you wanted to. Oh, this is the international ETF, that's why. So, if you wanted to buy SoftBank or any of these companies, most of them, and you're in the US, it's difficult. You would have to hope that they trade OTC, or you would have to have an account at a broker in another country, but it's hard. This ETF gives you very easy exposure to companies that list in Asia. So that's the good news. The bad news is their performance sucks. Now, keep in mind what I said before. Very often the laggards become the leaders and vice versa. So keep that in mind. Past performance does not equal future results. You should all know that, obviously. But that's been a huge loser this year. So that's IPOS. What else do we have here? Online retail. Really? I'm surprised to see that on here. Down 25% this year. Let's see what's in it. Oh, it's international. That's why. Again, with the international. I keep skipping that word. Shopify. Bunch of companies I never heard of. Coupang. Okay, it's been a tough one. Easy Mike wants to know what happened to TAN. If there's any ETFs you ought to look at. Yeah, I see a few. Okay, so let's go look at these. So let's start with TAN. Solar. So cyclical, right? So cyclical. TAN is actually like the poster child for that reversal I was talking about, right? Where the worst becomes the best and the best becomes the worst. TAN does that all the freaking time. I'm going to pull up a long-term chart of TAN right now. Go to Benzinga Pro, which is what I use for charts. Okay, bring TAN up on the screen. TAN. Okay. Look at the performance of TAN since inception. Okay, let's go to look at that thing. It either gets crushed or it's a beast. There is almost no middle ground. So if we zoom in here, you can see from 2015 to basically for 2 years, this ETF sucked. It was hot garbage. Then it was one of your best performers in 2019 and 2020, and now this year it sucks. Again. I'm not going to pretend to be an expert on the solar market because I'm not. But this ETF is constantly among your biggest gainers or your biggest losers in ETF land. It just is. So it's been a crappy year for TAN. Does that mean it could reverse? Potentially. Anyway, let's pull up the actual details of the ETF here. Back to this tool. etfdb.com. Free plug. Okay. What do we got? Expense ratio. Not super cheap, not super high. Sort of middle of the road. It is what it is. 6.69, 69 basis points. It's fine. I'm sure you can find cheaper, but it's not outrageous. Anything here? No. Let's go to... we looked at that. Let's look at the holdings. again, pretty top heavy, right? End phase, Solar Edge, First Solar, Sunrun, whatever that guy is over in China. You're talking about 5 companies making up almost half the ETF. So not great. Not super diversified. Let's look at the flows. Oh wow. Oh, this is a 1 month. Let's go 1 year. That's interesting. A lot of outflows this year. Look at that. So what this means is basically there's been net sellers of the fund this year. By well, no, actually there's been net flows for 1 year in the positive. But over the last 10 months, 11 months, net sellers. Very interesting. Huh. People taking profits. Good. Here's a cool tool that I like. It sort of it tracks the price versus the AUM, right? Price is in blue, AUM is in, or the flows are in green. It gives you like a chart where it stacks them up against each other. So basically, what you want to see here is you want to see how the blue impacts the green and vice versa. So for example, when you see big blues, right? That's big price swings. Does that lead to big green swings or not really? In this case, not really, right? The blues don't really lead to a lot of green. In some cases it does, but not always. This is a good breakdown. And it just shows you like how the investor behavior follows the price. When it goes down, are people selling? Are they buying more? Are they doing nothing? I do like this chart very much. Someone had asked about QYLD. Robin did. Yeah, I know that one. I feel like you've asked about this before, Robin. Or someone has. I lost my music. All right, I don't know what Tim Quast is. Sorry, guys. If he joins, he joins. If he doesn't, he doesn't. Yeah. So it's basically a covered call in an ETF. Kind of brilliant, right? It takes away the pain in the ass that some people may find are involved with options. You don't actually have to buy any options if you don't want to. You just, and this is obviously specifically for the Qs. If you want to do a cover call on the Qs, and you don't want to have to deal with a stock position and an options position, you just buy this guy. Makes sense. Is there a market for it? What's the AUM? Yeah, there's a market for it. Look at that. 5 billion AUM. There's a market for it. It holds just it holds the NASDAQ, and then it'll hold some options on top of it, probably, right? Yeah, this is just the top 10. Honestly, this is a pretty good, easy way to do what for some could be a complicated strategy. I'm all for each strategies in a basket, which is what this is. It's not even that expensive. 60 basis points. It's not even that much. My thoughts on div. Dividends are great. No, that's not it. That's not it. Where's div? Nope, Spencer, wrong one. Hold on. Rohan, can I get some music back? I lost it. Thank you. Okay. Dividends are great. This is the one, right? Super SPAC Man? Yeah, okay. So what do we got? Okay, diversified. Good. Top holding 2%. Check. I like it. Fee, 45 basis points. Okay. Not terrible. Check. AUM. Does it have people behind it? Big money behind it? Sort of. It's a little small, right? 675 million. It's not nothing, but it's not exactly a lot either. What do we got? We got a multi-cap blend. Is this all US? Is that what this is? Let's do that guy. I know what this was. I bet you I know what this was. See how there is this big outflow followed by a big inflow, right? Because that's what the green is. The green is money coming in and out. You had a big outflow on the 6th and a big inflow on the 7th. This could have been a tax-related thing. It's called a heartbeat trade. It's actually a perfectly legal loophole for ETFs. It's one of the things that keeps the price of ETFs low. I bet you that's what that was. It's basically a way for the ETF to avoid taxes, which means you avoid taxes. What else do we see here? All right, so it looks like it's mostly US and just one thing in the UK. Sectors, no surprise there. It's got staples, banks, and utilities because they all pay dividends. Okay, pretty evenly split. Mid, large, small. I like it. Yeah, this is solid. To get some dividend exposure, this is solid. I'm gonna put this on my list. All right, Rohan, can we change this? This is a bit too hard for me. Thank you.
This was Aaron Thomas's suggestion, for the record.
It's he. Hey, you guys want to hear something funny? Last night I introduced my fiance to the Island Boys. She didn't know what they were. She didn't know who they were. Okay, I'm catching up on the chat. I apologize. Do I swing ETFs? I have in the past. I don't do it frequently. You certainly can. You absolutely can do that. That's the best part. Not every ETF is super liquid, right? So know that going in. I would definitely avoid day trading or swing trading ETFs that are not liquid, that have wide spreads. You don't want that. You want to stick with the ones that are tight. You know, SPY is the most liquid ETF there is. Easy Mike, I love it. I love it. What else do we have here? DRVN. Okay. I don't know this one. ETF is no longer active? Well, okay. That's why I don't know it. Unless their data is wrong. Let's check Pro. Oh, that's a stock. That's why. All right, throw me for a loop there. Why did ARK create so many similar ETFs? That is a great question. I would love to know the answer to that myself. I'm sorry, I'm reading the chat right now. What do we think of the market entering next week? TechBridge, what do you think? Here's what I think, all right? I think I don't know jack until Wednesday. I am not making a call until Wednesday afternoon. Actually, like end of day Wednesday, right? Because Wednesday we have the Fed meeting. Whatever they say could change the whole dynamic here. What seems to be the consensus is they're going to talk about raising rates next year more than one, perhaps. If Jerome Powell's testimony is to be believed, they are going to talk about their tapering being faster than previously thought. If they stick to the script, I think the market could go higher. If they do not stick to that script, market, who the hell knows? But I would never want to step in front of the Fed and make a call ahead of that meeting. Because that's all that matters is the Fed. All that matters. So that's my answer. It's a cop-out. But wait till Wednesday. Honest to God, wait till Wednesday. We really don't know anything until Wednesday. Once that's out of the way, there's basically no catalyst for the rest of the year. We have an options expiration on Friday. That's important. Next Friday, I mean. But like outside of that, nothing. It is the last catalyst of the year. So let's get that out of the way first. Then we can say with more certainty, okay, rest of the year looks good, rest of the year looks bad. That's my thought. Yeah, we have Quad Witch next Friday. That's kind of the only other catalyst. Okay. And on the ARK Invest thing, does anyone know why they made the ticker of the new ETF so different? I can't even remember it. Because all their other tickers are so easy to remember. And this one is it's what's the freaking I can't remember it now. It's I'm on their website right now and it's giving me weird website's weird. Yeah, like why is it CTRU? They don't know that? I don't know. I had people ask me as the years gone on if I would sell my ARK W. The answer is I've repeatedly said no, but it is getting difficult to keep justifying that. Right? You are paying, I'm paying, right? A not insignificant fee for, I mean, I know it was great last year, but this year was tough. Basically, here's where I'm at on the ARK W. I probably don't want to stomach another year like this year. So if next year is like this year, I'm done. If it's not, then cool. But I probably can't do another year. It's been pretty brutal to watch, you know. Oh, Tim Quast says he's joining. That's awesome. So Tim Quast will be on in a second, which will be great. And it won't be just me. Easy, Mike. Those are the days, right? Yeah, I'll be honest. I don't even read. More often than not, I don't even open the ARK Invest daily emails. I swear. I get them, and I just delete them. Yeah, Christian, I'm with you, bro. I'm with you. With you 100%. Is Ford still going up, Matty Ice? Really? Is Ford above 21? Let's see. Where's my Benzinga Pro? No, it's almost at 21. Holy crap. $21 alert in Ford. What? Do we know why? Matty Ice, do you know why? This is insane. 20-year high. I haven't even been at a 20-year high, but now we're breaking out all over again. Gosh, good for Ford. I sold my Ford a long time ago. I should buy it back. I can't chase it, but I really do want to buy it back. How's GM doing? Same thing. Ford and GM. Jeez. All right, and just for fun, Tesla. Oh, Tesla. I haven't checked the news feed at all. I guess I should do that first. All right. Dow Jones report. GM getting invested in EVs. We knew that already. Someone in chat saying Ford was on Kramer yesterday. Oh wait, is this from the investing club? Is that what this is? Is that why Ford is higher? The Kramer pump? All right. Kramer's got juice. Kramer's got juice. You know what? Speaking of Kramer, let's do this. I know we posted his the event yesterday. We posted all the stocks. No, that wasn't it. I know we did. All right, we got PayPal, American Eagle, Disney, Wynn, Marvell, Costco, Microsoft. Here we go. Oh, that was from the show. So this looks like the list from yesterday. PayPal, American Eagle, Ford, Disney, Wynn, Marvel, Costco, Microsoft. Damn, are they all up today? No, they're not. It's hard to chase Kramer. All right, so we'll wait for Tim, and after Tim, we'll do. We got a couple trivia questions that I want to do. This is fun. I saw this trivia on Twitter earlier in the week, and I thought it'd be great for the show. So we'll do that after Tim. I'm just chilling, guys. I'm just chilling. Isn't this what like Matt Kors does, right? He just sits in quiet and silence. Trying to be like those guys. Just sit, just chill. When's Ford going to buy XL? Is that a thing? In theory, some of these EV companies have to get bought, right? Like the ones that are beaten down so much, and the ones that actually have value. I don't know who they are. Like Canoe, I have no idea. But like you would think a couple of them would get acquired, because there's like 30 of them. Most of them suck, but some of them don't. Right? How is AMC doing today, Tiny Pie? Did it hold that 25? All right. Well, this does not look good. What was the low of the day? 26 something. 26 even, almost 26.02. This does not look promising. I'm sorry. If you missed my spiel about the insider sales earlier, I've given it like 3 times today. But basically, you had 2 insider sales filings hit last night. The sales were on Tuesday. CEO Adam Aaron sold 3/4 of his stake in the company. Sean Goodman, the CFO, sold all of his shares. This does not include options. Let's be clear about that. I'm sure both of them have unvested options, and is also pre-planned sales. So be aware of that. But still, never a great sign. We always say there's a million reasons to buy and only one. There's one reason to buy and a million reasons to sell. You could sell for, I don't know, you could sell to fund a purchase. You could sell because you're getting divorced. You could sell to avoid taxes. There's only one reason to buy, though. You think it's going up. Sorry, AMC. It's tough. GameStop, same thing. Not as bad today, but yeah. If you are someone you know is still holding these stocks after all this time, they're probably up. Maybe they're not. I don't know. If I was up after all this time, I would sell. If it were me. At some point, you got to take some money off the table. You got to book a gain. And you know what really pisses me off? And this happens like on our channel all the time. You know, we'll bring on a guest or we'll talk about a stock. And people will feel like we are pushing it down. Or they'll feel like we're not doing all that we can to promote the stock. And that we should be doing more to help the stock go up. As if their stock has like a divided right to go higher. And they have a divided right to make money. You don't. You don't. It pisses me off when I see that. Like, some of the people that were in the chat the other day during our small cap event, we had Funware on the show. Obviously, it's a meme stock. And some of the comments I found just so disheartening. People saying, they have all their money invested in this stock. I hope that's not true. Seriously. Because the stock market is the best tool for wealth creation if you use it correctly. And if you don't, then you get what you ask for, right? I know. It really upsets me. Guys, you want to do trivia right now? You're saying very soon. Like, I don't know about Funware as a company. You know, I spoke to the CEO, the COO, the other day on a small cap event. If you missed it, tough. basically, the takeaway from that presentation was they're going to be pivoting into more of a metaverse play. Cool. But regardless of all that, looking at this chart here, this is where charts do matter. Almost everybody who has bought this stock this year in the last couple of months is down. Almost everyone. I hope that some of those people have some kind of risk control. But let's be honest, they probably don't. Which sucks for them. I hope they're young and they learn a lesson and they move on. But you can't buy stock hoping it'll go up forever and not planning for the other side. What happens if it goes down? Any stock can go down in your face. Who am I? Who are you? We're nobody, right?
Spencer,
What's up?
that was a pretty epic monologue there. But bad news is we can't do trivia
Why not?
because there's another stream live on our channel currently, and the questions will jump to their chat because the tech kind of sucks like that.
Whoa, there's another stream on right now?
Trading school.
The trading school? I didn't know that.
I just found out. Folks, if you haven't checked out the trading school,
With Ryan Faluna.
check it out. After
Yo.
this, of course.
What if we just... See, I'm waiting for Tim Quast to join. But why don't we just do... This is weird. What if we just simulcasted Ryan onto our show? Think we could do that?
We could probably do that, yeah.
If you guys don't know about the Benzinga Training School, I would say at the very least, check it out. We probably do a poor job. Actually, I know we do a poor job of promoting ourselves. We promote Benzinga Pro. Sometimes we promote the training school sometimes, and Nick Shaheen's options boot camp sometimes. But we need to do a better job of doing that. The ecosystem has to work together. So, yeah, see, Master of Stonks. Master of Stonks, you're not wrong. You're not wrong. It's messed up, man. And the reason I get upset about it is because, like, I really do believe owning stocks is the best way to generate wealth for yourself long term. I believe that with all my heart. But the people that are buying, throwing all their money on DWAC, it's like throwing all your money on a red, right? Yeah, maybe you hit it, maybe you don't, but that's not the way. That's not sustainable. I don't know, man. I don't know. It just disheartens me, I find a lot of people, all they want is to just get rich quickly, which is fine. That'd be nice. We all want that, right? But that's not really how this game works. People are mad that AMC is not going up as if it has to go up for you. Screw you. It doesn't have to go up for you. It doesn't have to go up for anyone. It doesn't have to go down either. It could just go sideways forever, right? I don't know. It really bums me out. I'll be honest. It bums me out. All right, let's do this. As I wait for Tim. Tim said he's joining. I don't know what that is, but gonna wait for him for a few more minutes. In the meantime, let's do this. Come on now. Benzinga Pro. Okay. Let's take a look at the earnings calendar for next week. Because once you know it, we got some names coming up. All right. I've made a calendar in Benzinga Pro. I have filtered the calendar for next week, and I've sorted it by importance. Actually, screw importance. Let's do estimated revenue. All right. Big names. Who do we got? We got FedEx after the bell on Thursday. We've got Accenture on Thursday morning. Jabil Circuits. I don't really care. But do you guys care about Jabil? I don't really care about Jabil. Sorry. Lennar Home Builders. That's interesting. Wednesday. Adobe. I see Adobe Thursday after the close. Darden Restaurants. Darden. Oh, that's going to be a good one because they're the ones that came out and said a month ago, like, oh, major supply chain screw-ups, cost increases, we're screwed. They said that. They were the ones that made me sell my Starbucks. I want to hear what they say in their report. So that's Friday. What else do we have? No one. Actually, that's kind of it. Winnebago. All right. FedEx, Adobe, Darden, Winnebago, Steelcase, I guess, is interesting. Lennar. And that's it. All right. So a half dozen names. So not nothing, but, you know, it's the end of the year. Super Spackman, I want Tim's thoughts too. Should I just call Tim? Should I just call Sel? Here, let's just call Tim right now. Here. He does not know. I'm going to call him. Let's see if he answers. All right. He did not answer the phone, which is sad. Yeah. All right. I don't know. Tim may not join the show today. Whatever. It is what it is. So no trivia, no show, no Tim, and now Ryan Fluna, I think he's off. Wait, actually, can we do trivia? Guys, I think Ryan's off.
Yeah, we could do it.
Ryan's off. He's done.
Shoot. All right, give me a sec. I'll be
Okay. We can do trivia now because Ryan is, whatever he was doing is gone. Also, I want to plug the next show, Moon or Bust, 2 o'clock. They're talking to Mongoose Coin. All right. What else we got here? How are we looking today across the board? We're looking. Let's just take stock at some of the earnings reports we had. So we had Costco overnight. How's it doing today? Oh my gosh, Costco! Why did I never buy this damn stock? Pissed off. Look at this thing. You can't stop Costco. Freaking A. Annoying as heck. What else do I have? Adobe? Not Adobe. Avago, right? Broadcom. Broadcom off its highs. Oracle. How are we looking?
All right, good sir.
Same chart. Oracle and Broadcom. What's up, Rohan?
So we had another interview to run, so it's just gonna be me and you because Aaron had to go do that.
That's great. Me and you in the chat. Let's do some trivia. I think we only have like 5 questions anyway.
Yeah, I do believe it is. I was trying to get a camera set up on me, but I'll use the ceiling camera.
That's great.
I think that should do the trick.
All right, so the theme today, this is a good one. I saw a tweet earlier in the week, and I thought this would be a good trivia theme. The theme is first products. We're going to give you a company, and we're going to give you 4 choices, and you're going to have to pick which one of those choices was the first product that the company made or was known for. It's going to be fun. I'm excited. Whenever you're ready.
We're getting there.
All right. No worries. No rush. No rush. Anyone have any good weekend plans? I'll tell you where I'll be tomorrow morning. I'll be on premarketprep.com. True story. I will actually be there tomorrow morning, 9 to 12:30. I'll just show you guys on my screen. Premarketprep.com. Joel, Dennis, Rob Friesen are doing a whole special all about tape reading and order execution and order flow. Here's how to sign up. You literally just go to premarketprep.com and sign up for the webinar. It's one day. That's it. You can buy their other courses. Basically, could be 3.5 hours of Dennis and a little bit of Rob and a little bit of Joel. And I'll be there as well in the background. Check it out, premarketprep.com.
All right, we ready for some trivia?
I am, I think.
All right, folks. Spencer, I'm going to hijack your camera for a second here.
Whoa.
And just kind of explain what's happening.
Whoa.
Whoa. All right, folks, if you have not played trivia before, real quick, it's a quick game where there's 4 multiple choice answers for each question. What are they, 5 questions today? I'm not exactly sure. But basically, for each question, whatever answer you want, type the corresponding number in the chat as fast as you can, because the number of questions you get right and how fast you answer them is how you win. Without further ado, Spencer is blowing his nose right now, but he'll be back on camera in a second.
No, I'm not. I'm here.
What? But folks, let
I'm
me
here.
get this thing started. Spencer, you ready?
I'm ready. Let's go.
All right. Trivia is starting up. Hopefully it works. Wait for it. And here we go.
Nice. Excellent. First products trivia. Ten seconds. Drop drop the number of the option in the chat. Let's see what we got.
All right. Question number 1. Spencer, why don't you go for that one?
What was Nokia's first product? Was it 1 toilet paper, 2 makeup, 3 car tires, or 4 bricks?
Oh, God. None of these are even technology.
I know. I kind of want to go. Oh, wait. Nokia is Japanese, right?
Yeah.
Oh, my gosh. I have no idea.
This is pretty hard. I want to say car tires. Why not?
Toilet paper. I don't know. I have no idea. I'm saying 1. All right, Nokia is not. Yeah, Nokia is Swedish. Thank you, guys. I'm an idiot. It's not Japanese.
Wait, it's Swedish?
Yeah.
Oh. Then I feel like, toilet paper. Wow.
Toilet paper.
There we go.
Yes. TP or Finnish. Sorry, it's Nordic. It's a Nordic company. I'm sorry if I offended.
I had no clue.
If I offended any Swedes or Finns, I apologize.
Folks, what was Colgate? The famous toothbrush or toothpaste brand. What was Colgate's first product? 1, shoes. 2, knives. 3, candles. Or 4, braces. All right, so there's some dental options, but I feel like
It's not. No, it's not braces.
braces would be kind of weird.
I feel. I want to say. I want to say 3, because like I don't know. Maybe.
Screw it. I'm gonna say candles.
Yeah, I was gonna say 3 too. Only because like you think candles are made of wax. Maybe somebody like brushed their teeth with it once. Or like, hey, this stuff really works. I don't know. I'm just grasping at straws here. No idea. I'm gonna say candles. I'm seeing some threes, seeing some braces, seeing some knives. Could be knives. Could be shoes too. Not seeing any ones though. Watch it be shoes. Oh,
Hey.
it was. I'm 2 for 2. I'm 2 for 2. Wow.
I'm 1 for 2.
All right. What was Sony's? Oh, this one I actually know. Oh wait, no, I don't. Wait, yes, I think I do. What
I'm
was
gonna go rice
Sony's
cookers,
first
I'm
product?
just saying that.
Pens, newspapers, gunpowder, or rice cookers? I think I actually do know this.
Actually, it's probably pens.
I think it's 4.
But I'm gonna say rice cookers. That's my answer too.
I think it's 4. And I was confusing. I think I know what Nintendo is Nintendo a question, because I think I know what Nintendo's was also. But that might be a question, so we'll save it. I'm pretty sure it's 4 though. Could be wrong. Seen a lot of 4s. Seen a 3. 1 3. Seen a 2. Seen a couple 3s.
Folks, 6 is not an option.
Wait, who put 6?
I didn't catch.
Yes, it was.
Hey-o.
All right, most of us got that one.
No.
All right, cool. Next question. Are we frozen?
I sure hope not. There we go.
There we go. Okay.
Hey, look at that. What was Nintendo's first product? Spencer apparently knows.
I
Why
do
don't you
know.
enlighten us?
I do know this one.
Options are toothpicks, nail clippers, gaming consoles, or card games.
Yeah, this one
I'm
I
gonna go
have.
card games.
I happen to know the answer is 4. Seen a couple 3s.
I'm not for sure, but I'm pretty sure I heard that.
Yeah, I heard that a long time ago. I could be wrong. Maybe I was told a lie.
Maybe they made something before card games.
Like toothpicks?
Yeah.
Could be. Enver, I did not bribe Enver. Let's get real. I'm pretty sure it's card games.
The suspense is building. This thing's got to be lagging a bit.
Maybe. Yes.
Whoa,
Card games. Boom.
Correctamundo.
All right. So last one. Some of us are 4 for 4. What is the last question here? Final round of trivia today. What was Lego's first product? Was it wooden toys, sticky notes, rugs, or cinder blocks? Lego is a Swedish company. Is that right, guys?
I have no clue.
Are they Dutch? Are they Swedish? Are they from Norway? I know they're from that part of the world. Help me out here. My
I
answer,
feel like as a child, I was just like, oh, Legos are so American. These have to be American.
the answer has to be either 1 or 4, right?
Yeah. Well, I could be like, yeah, I'd say wooden toys is definitely an option.
I'm gonna go with. I just entered 4. Because blocks, right? Like building blocks. It's what I thought.
Cinder blocks? That's like construction to toys.
I know,
That's
but
weird.
it's the same idea. It's building things.
Well, you were wrong, sir.
It was wooden toys. Tiny Pie says they're Danish. Thank you, Tiny Pie. I knew I was in the right neck of the woods. All right, wooden toys. Hey, did you ever play with Lincoln Logs growing up?
Oh yeah,
Those are great.
those are dope.
Kindred Duke, who has definitely won before.
In that case, though, well, Ben.
No,
is that you?
but
Are you
it hasn't been recently, so he's okay.
You know, and he didn't tie with anyone, so therefore, that is a win, my sir.
Oh, there was a few 4s, but he got it first. So, Kindred Duke,
Kindred Duke.
email us.
He said first win.
Okay, I stand corrected. Shows@benzinga.com. We'll have our intern Aaron Bree send you some swag. I'll put it up on the screen.
Surprise, motherfucker.
It doesn't get old.
Nope.
All right. Shows at benzinga.com, Kindred Duke. Email us with proof of your identity so we know it's you.
There we go.
I don't know how you do that.
Folks, that was your trivia today. I'm going to toss it back to you, Spencer.
All right. Thank you, Rohan. That was fun. Next time we got to do more questions. Usually we do like 10 questions. That was a short one. A bit of a weird week here, but Kindred Duke, congratulations. You win. We can send you a mug. We can send you a shirt. We can send you a hoodie. Kindred Duke, pop on over to our swag store, which is, I'll bring it up on the screen here, swag.benzinga.com. If you have a preference for anything in there, just let us know. If you want a piece of clothing, tell us your shirt size, please. Check it out. We got shirts. We got baby onesies. We got accessories like mugs and hats and whatever. This needs to be updated. This hasn't been updated in a while. We got to update the swag store, guys. Stickers. You want some socks? You want some underwear? You want some Benzinga underwear? We'll send you that. Oh, the winter collection. Look at that. Whoa. Benzinga ugly Christmas sweater. Or Benzinga hat. Those are good. Benzinga beanies. I might have to get me one of those. Those are good. Benzinga ugly Christmas sweater. That's awesome. And the beanie hat with the pom-pom or without the pom-pom. That's pretty sweet. Again, swag.benzinga.com. Check it out. Public store. On Shopify, by the way. So, long Shopify. I'm loving the Christmas sweater. That's great. And if you guys have ideas for more segments we could do, this is kind of a weird show because Aaron Bree abandoned me this morning, and our guest abandoned me, so apparently. And we had another planned guest that was canceled. So I'm just sort of here hanging out with you guys for the next half hour. If you have any ideas for segments, drop them in the chat. Email us, whatever. Just kind of hanging out. Ron, can we get the tunes back, please? Tune Squad.
Let me see if my phone has, been charged. I think I got you.
Wait, Kindred said what? Kindred, you want us? We'll send you a onesie, Kindred. I mean, if you have a baby, we will send you a onesie, if that's what you want. Yeah, AB. This is the message I got from AB, or he called me actually, and he said he said he'll let me know. He said his goal is to be back by 1:00, and he will let me know. Well, spoiler alert, he did not let me know. He did not let me know. All right. I'm just keeping an eye on the market, looking at different things. Tim. Tim is emailing me.
Should we see if anyone in the chat wants to come on?
Hold on, no. Tim just emailed me and he goes, "Do you still
emailed
want
you?
me to come on?" I was like, "Tim, I emailed you like 3 times."
I mean, let's get Tim on.
Stan. I don't know. I don't know. Sometimes. I'm trying, Super SPAC, man. I'm trying. I really am. You know what Benzinga needs? Benzinga needs NFTs. Benzinga doesn't have any NFTs. We have to get in on that. We're a little bit behind on the times. Maybe our new bosses can help us out. Give us some NFTs. Adult size onesies. Stock Tycoon. We can't. I don't think we have that in the store yet. Maybe one day. But no, we do not have. Hey! He's here! All right. We have powered through a gigantic miscommunication, but that is okay. Tim Quast from Market Structure Edge is here now. Let's get him on the show. Where's my special guest intro? And there he is. Tim, we made it. Good to see you.
Good to see you too. Do I have audio? I do.
Yeah,
Yes.
I apologize
Okay.
for the mix up.
No problem.
As usual, it's all my fault, but we'll power through it. How's your day going?
It's a Friday, and I can't say I'm sorry that it is. I'm frankly ready for the weekend. How about you?
Oh, you don't even. Yes, I'm so ready. Tim, Tim, yesterday for the very first time since the pandemic started, we had what amounted to basically full office. And it was
Really?
crazy.
Were people utterly unaccustomed to being around each other? Or was it a bunch of hugging?
I don't remember how to be around people, Tim.
We've lost all our social skills.
I've lost my skills. Not that I had them before. But anyway, enough of that. Let's talk markets here. What are you thinking? We had the CPI data obviously out today. We're going to get the Fed on a Wednesday. My stance was sit tight. I don't know, Jack, about anything until Wednesday comes. What say you?
Well, I always think about market structure. So
Yeah.
I always think about the context and the waxing and waning of supply and demand. And so you'll remember that on pre-market prep, I said that every time historically that the supply, the rate of demand in the market that we call market structure sentiment has been below 4, the market has surged, and it did. And I said the thing that will be interesting to see is what happens as we head into options expirations. The last ones of December are next week. So, and it's a split week. So here's what I told the edge users to expect. We would have a surge, then we'd have a little pullback into options expirations and a probable additional surge. Now, why? Because it all comes down to betting on the mispricing in options and futures and so on. And I'm not even, this is not about rational thought related to what Jay Powell may say on December 15th or any other data point. Inflation, historically low jobless claims, all those things are important inputs to output models, but are they really reflective of how the market works? No, the market works on supply and demand like any market, and it's very, very heavily calibrated to what thing will change important elements of demand. Well, options expirations are a major part of that. About 20% of market cap ties to derivatives. So if the market pulls back 2%, let's say ahead of those, I think we see a surge potentially. Then people will say, well, Jay Powell must have done a great job. And then we get through expirations, which don't end till about the 22nd, and we could have real volatility again. That's my expectation based on looking at the math of the marketplace. And so that's how I think about it.
So are you positioned any differently at all? Or are you yes, you are?
I am. I mean, I'm looking for supply-demand divergences. And I'll give you examples.
Yes, please.
So Tesla right now is terrible. And I still have a little Tesla. Yeah, I prefer not to, but I do. And but it's a horrible from a supply demand perspective. And I'm not going to compound being in it now by making the mistake of selling high supply and low demand. You don't want to do that as a trader. You want to buy peak demand and limited supply when the supply demand equation begins to turn. So I think you can see this. So let me show you. I was looking at Snap just a bit ago for somebody, but let's take a look at Tesla. This is the good. This is the bad, and then we'll look at the good. So when I look at Tesla, here's the problem. And once again, I think in terms of supply and demand. Demand is comprised of 4 major demographic influences in the stock market. There are people who buy story. What makes one company better than another company? Why is NVIDIA a great chip company? That's story. Characteristics. Well, you could buy, so models, hundreds of ETFs will buy NVIDIA, not because of its story, but because it is exposure to a part of the tech industry that NVIDIA represents well. Then there's price. People speculate on price. Machines speculate on price. Then there are derivatives. And you put all of that together, and it is demand. And when demand is awesome, price tends to rise. When demand is abysmal, price tends to fall. And it's not clockwork perfectly, but it's a very good read. So what we see here is here's Tesla's price, and it's all the way down about $1,000 a share because demand has gone from 10 to 2. And meanwhile, supply, short volume, has gone from way below trend, which was helpful here, to way above trend. So if you have excess supply and insufficient demand, would you buy that? Well, of course not.
No.
Don't buy that. That's not the thing to buy. I talked about Tilray this week, and I'm not am I a fan of the cannabis complex? Not particularly. But if I look at this and say, well, demand is all the way on the floor and supply plunges, well, it might go up. And sure enough, it did. Went up about 10% almost. It's not awesome because there's still very limited demand. But when there's a disconnect between supply and demand, price can move. The better example to me would be Microsoft. Here's an example of very stable demand, but a supply deficiency. See this? It's right at 5. Don't trade price. Price is capricious. Microsoft trades hundreds of thousands of times a day. A machine can fool you coming and going. Well, don't be fooled. Look at the demand side. Demand right at 5. What's supply doing? Falling below trend. What's the price likely to do, all other things being equal? Rise into options expirations. That's a nice place to be. It's not perfect, but that's how I think about the market. And it doesn't really matter what's going on. I'm going to look for those opportunities.
Tim, something I've been wondering is there any kind of seasonality effect to this data, to market structure? In other words, we're coming into the end of the year. It's typically a very low volume time in the year in terms of trading. Does that affect this at all?
Only to the degree that money shows up or doesn't show up. I would say it's contextually influenced rather than seasonally influenced. Market structure edge is built around what takes place in the stock market when the stock market has high frequency traders, which we call fast traders, a whole bunch of passive money, stock pickers trying to navigate it, and a huge derivative influence. So here's my point to answer your question about what might happen into year end. What has to happen? Well, as a stock picker, nothing. I could choose to sit out. I could choose to buy stuff or sell stuff. I might do some tax planning. But if I haven't done that already, it's getting pretty late in the game. So that's not a big consideration. Active money, stock pickers are going to think about what Jay Powell says and all the economic data and how should I be more or less exposed to equities? How about passive money? To the degree that people who have managed accounts, like evil rich capitalists like me, have managed accounts who are going to say, well, do I want to have more or less exposure to equities or to bonds, or what's the effect of interest rates? What's Jeff Gundlach saying at Double Line? Well, all that's going to factor into how we position into year end. But the broad long-term money that is in passive vehicles like index funds and exchange traded funds, and 40% of all retirement funds just about now are in passive large cap blend funds. What is that money going to do? Well, it's got to be trued up to its index by year end. That is a regulatory fact. And have they done that? No, they haven't done it, because we can see that stuff in the patterns. So I would expect that's going to happen in the next 2 weeks. So are they going to remove money? Or are they going to put more money in? What's the net effect going to be? Well, inflows are much greater than outflows. So I continue to say, except for a period of volatility around Christmas, maybe post-Christmas, that we're going to see some passive money in the market next week. We'll see. I could be wrong.
Tim, do you have a reaction to the headline this morning that the DOJ is looking into predatory short selling from certain hedge funds? This is a thing we talk about a lot.
Yeah.
There's nothing wrong with short selling. In fact, it's good, but in a way, because it keeps the market efficient. But there is certain short sellers that do engage in nefarious activity as it pertains to the stock that they're targeting. Do you have thoughts on the DOJ's on the news today?
Well, I've spent most of my adult life in the investor relations profession. That's the liaison to Wall Street for public companies. And 26 years, I've been a member of my professional association. I just rolled off the board. It's one of our long topics of discussion. Public companies don't believe they have, they're correct. We do not have good information on the economic interest of people who are long or short in stocks. We have woeful disclosure standards here in the United States. In Australia, any public company can ask any institutional investor, what is your total economic exposure? Are you long or short? What are your derivatives positions? And you, by law, must tell that company within 3 days.
That's amazing.
Today, isn't that something? Well, a lot of the world has that standard. Our standard is a 1975 standard called Section 13F of the amendments to the Securities Acts of 1933 and 34 as amended. and those require a disclosure 45 days after the end of a quarter. Back when we were using the US Postal Service for instant messaging, that made some sense. Today, it makes zero sense. So yes, I think there is predatory behavior. There is an effort to exploit what people can't see. And keep in mind, Dodd-Frank mandated that the Securities Exchange Commission create monthly short disclosures. They haven't done it because the legislation put no time frame on it. And the lobbyists for the trading community are far more powerful than the lobbyists for the public company community. And so nothing has happened. That's my long-winded answer about, yes, I think there are predatory practices. Now, having said that, as ever with anything governmental, there is an element of hypocrisy in it. So number one, let's look at just what is the prospect that predatory short practices are going to work? Look at what the market's done. You're almost an idiot to be short something. And number two, the great bulk of shorting in the market comes from market makers who are exempt from Reg SHO, Rule 203b2, which requires that you have to locate shares in order to short them. So Citadel could short everything in the market all day long with impunity, and all they're doing is fulfilling their regulatory obligation to make a continuous auction. So with the one hand, the SEC accuses one part of the market, which is immaterial to outcomes, of doing things that are incorrect, while with the other, they actively require it of different participants in the market. It's cognitive dissonance, holding two competing ideas in your head simultaneously.
All right, I'm with you on the fact that I hope we get somewhere. I hope we get some change because there was a lot of talk back when earlier in the year when the GameStop and AMC things were going on, and a lot of people were saying, well, how is what Reddit is doing different than a short seller publishing a report, and they're not wrong. There really is nothing different. Right?
There is nothing different.
There is no difference, right? So yeah, I hope we get some change. We got a few questions in the chat. Sure. Tim, who was it? Let me find who said it. Yes, Young Money wants your thoughts on chip makers through the end of the year.
Okay. All right, so let's. I'm going to go to. I actually keep a semiconductors portfolio, nice. which you can do. So if you're using Edge, just set up. You can put whatever you want in there and track the supply-demand balances, and that will trump every other thing. We could talk all day about what are the prospects for the semiconductor industry as it applies to all kinds of communication devices, from smartphones to automobiles with all the capabilities of a smartphone, right? Those are fundamental factors. Well, let's look at the supply-demand balance because that's how I like to think about it. Let's see, here's semis. And I've got both equipment and chip companies in here. So here's where the supply-demand balance is at present. So demand has bottomed just below 5, and supply is on a nice downtrend. Those conditions, we can't predict that demand's going to come back. I suspect that it will. The chip industry tends to be a place that gets excess and outsized allocations in a market that prefers growth, right? And so we continue to have a market that is heavily biased to growth. Value underperforms growth. So I look at that and say, I would probably, I'm only going to trade for the rest of the year. because we're heading into options expirations, and I think it could be volatile afterward. But I look at that and say, we're going to have good opportunity in chips. If we look at, Lam Research, which is a great semiconductor company, look at that. I mean, it's just fabulous. It's been a 10 for most of the past 20 days. It's dropped a little bit, but so has supply. That's a stock that could continue to deliver gains. And I look at all of these, the data here, and it's really a pretty good group to look at and say, I'm going to be, particularly in January, there are going to be some really good returns in chips to me.
Nice. All right. This one's less direct here, but Pablo wants to know, because you mentioned earlier you're looking for, sectors, stocks, industries that have, a supply demand imbalance.
Right.
Where are you seeing that right now?
Right, and I'll tell you, it is challenging to find. If we look at the broad market, I'm going to do that first, Pablo. So the broad market has bottomed. So this is what I was talking about on Monday on pre-market prep, that when the market drops below that green line, the stocks tend to rise. And they tend to have upside until it peaks. Now, it might be a weak top. But I look at that and say, generally, there is additional opportunity. Now let's go look to see if we can figure out where the money's going. And I like to do this by looking at dynamic portfolios because it'll tell me all the sectors. So let's just go through the sectors and look at it, Pablo. Communication services, not bad. Rising demand, but supply is pretty high too. See that trend line? That tells me there's muted upside. I would say on average, maybe 5% opportunity there. Not great. Consumer discretionary is actually better. Same rising demand, but supply a little bit below trend. Consumer staples, all these demand trends look pretty good. They're moving back toward 5. The risk for us is, what if they don't get there? So I think of that 10-point scale to tell us where there is excess demand. 5 and below, there's insufficient demand to lift prices. 5 and above, or above 5, there's excess demand, all other things being equal. So I look at energy. How's energy? Actually not bad, right? Demand curve rising, supply side falling. That's pretty good news. And financials, same thing. High supply side falling, demand rising. So I'd look at financials. That's pretty good. And energy, both of those to me look pretty good in the short term. And that's it from a sector standpoint. Then we could narrow it in. How about tech? Let's look at tech. Why am I not seeing that? Let's just go to it. We'll do it this way. That's the engine. So we want to know, right? It's just very important to know that. Oops, where was it? We just had it.
After this, okay.
There we go. So same kind of demand curve. The demand curves are all pretty good, telling us that passive money is coming back. It's not coming back forcefully, but Pablo, those are where I'd look. That's not bad. Communication services, energy, consumer discretionary, tech to a degree. That's not too bad.
Tim, earlier in the show, I was talking about something that I've observed over the years, specifically with regards to ETFs and a lot of like industry hyper-specific ETFs, is that a lot of times the biggest laggards one year will be the biggest leaders the next, and and vice versa. Have you also observed that?
Yes, and there once again is a market structure explanation for it when you understand the relationship between exchange traded funds and the underlying assets. And it's kind of weedy stuff, so you can stop me at any point, Spencer. But I want to explain how they work. So when you buy a BlackRock ETF, BlackRock does not manage your money. You will own those ETF shares in a brokerage account. BlackRock will have no record for you and no fiduciary responsibility for you. Have you ever thought about that? That's wholly different than a mutual fund. If you own a Vanguard mutual fund, you have a record at Vanguard, and Vanguard is managing your asset. It's a wholly different model.
Sure.
And that explains why the stuff that does great at one point in the year does lousy later in the year. It's because of the relationship. So BlackRock, when they take in money selling ETF shares that have their name on it. Morgan Stanley will sell the shares. They manage and own those assets. It's their stuff to do with whatever they want. And as that stuff appreciates,
Well, not whatever they want.
Almost. Go read a prospectus. This is what led me to that conclusion.
All right.
If you go read the statement of it, go look it up. Go Google BlackRock Statement of Additional Information and go into about page 95 in that document and start reading it. You will be shocked at what they can do with it because it's their own stuff. They can use it to leverage into derivatives. They can swap it. They can lend it. They can do whatever they want because they don't have a fiduciary responsibility to anyone other than the owners of BlackRock.
Okay, so how does this explain then why
Okay, so as share prices appreciate, BlackRock can put those stocks that have accumulated capital gains into what's called the redemption basket to get rid of. So what will happen is there's a continuous ebb and flow of relationships and money following the underlying assets called stocks and the shares called ETFs, which are a tracking instrument. So if the underlying stocks go way up, then at some point people are going to begin to sell them. So then you have to bring ETF shares out of the market to level set the associated supply with underlying equities. Well, BlackRock can do something you can't do. BlackRock will take all those appreciated stocks in that arcane ETF that went way up and put them in the basket and say, these are the only things we will supply to you in exchange for ETF shares. So all of that stuff gets washed out and all the prices go down because BlackRock's getting rid of it. Then at some future, then they get something else. So then you get that huge divergence where the stuff that did great does lousy. And at some point, then BlackRock goes, now I want all that stuff that has been greatly depreciated brought back, and I'll only take that to give you ETF shares, and they bring it back at a stepped up tax basis. I would argue, they avoid hundreds of billions of dollars of taxes across the ETF complex by doing that, where you and I, when we buy and sell ETFs, those are going to be subject to either ordinary income if it's short term or long-term capital gains.
To be clear, this is how they can afford to have an ETF with like a fee of 2 bips because
exactly.
Yeah.
Right.
Okay.
Well, I've asked BlackRock, why are you charging a management fee at all when you don't manage my money? Why am I paying you a fee? If you want to call it a licensing fee for your name, that's fine. But you can't say it's a management fee when you're not managing my money. Why would I pay some shop down the street a management fee when my money is managed over at that shop? It doesn't even make sense. But people don't ask these questions and they don't think about it.
You're right. Tim's right, as always. Tim Quast, the founder of Market Structure Edge. I think my mistake, Tim, is I only made it to page 17, not to page 95.
You got to go to page 95.
I got some more reading to do over the weekend. Tim, have a good one, sir. We'll see you Monday on Pre-Market Prep. Have a good one.
Thank you. Thanks,
all right,
Spencer.
guys, that's a wrap on Benzinga Live today. We made it through the end. I don't know how I did it, considering that I'm half awake right now. And I had no co-host. So thank you all for bearing with me today. We powered through. Thanks to Rohan for the trivia. Thanks to everyone in the chat. Matty Ice, Super Spackman, Young Money, Pablo, all you guys. Thadder, Easy Mike. Thadder, I think I like you. I think I like you. You're spicy. You wake up on the wrong side of the bed a lot, but I think I like you. You give some good information, Thadder. Hit the like button, please, and thank you. I'd appreciate that. Mooner Bus is going live right now. They're talking about the Mongoose coin or whatever the hell that is. So have fun with that. I'll catch you guys on At the Close in an hour and a half. I'll have Joel with me, thank God. And until then, just stay green.